Hello, chart watchers, and welcome to this Tuesday, September 10th, 2019 Market Watchers live show with your host, Tom Boley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, the stock market trying to hold up. Rotation does continue, though. The Dow Jones Industrial Average currently down 10, the S&P 500 down 12, the NASDAQ down 40, but we are well off the earlier low. The Russell 2000 hanging close to the break-even line, currently down just 1 2/3 points. 10-year Treasury yield continuing to move up. This is about 5 or 6 days in a row now, and we are consistently staying above that 20-day moving average. So it does look like we're going to move up into that 180 to 195 range. We'll see what happens if and when we get there. Volatility index, which had been drifting lower, now just kind of stagnant. It is up a bit today, about 2.5%. Energy continues to lead here over the last few days. You can see a big move here through the 20-day, now through the 50-day. Crude oil prices have been rising, and as a result, many of the energy shares starting to show some life. Materials also having a pretty good day, although we have not seen the breakout. We did move up above the 20-day about a week and a half ago, more in a flag pattern at this point, nice uptrend. Haven't been able to get through that 50-day. We'll see if we can close above it later today. To the downside, a lot of the areas that have been leading the market are showing weakness, even though the market overall hasn't been that bad. Real estate, which had been a big leader, you can see now for a fourth straight day, taking a big drop. Technology, certain areas in technology getting hit, especially software. But you can see moving down to test this gap support area on the XLK. And then also consumer discretionary, which had been holding up pretty well, actually pulling back. And one of the strongest areas in consumer discretionary has been the restaurants and bars, having another rough day today. The durable household products making a nice breakout here, looks good. Drug retailers also coming up, trying to take out a prior reaction high up near this 820 level. We'll see whether or not we can do it this time. And then a couple of the areas within the oil patch looking pretty good. But you can see here the DJUSOI for about maybe the last 2 weeks, it's been up almost nonstop. But this is an area where we're going to want to watch because we did break it down at 240. We had multiple tops up near 260. So I think as we get into this 240, 260 range, we're going to see whether or not this strength continues. And then finally, I wrote earlier today in my blog that I'm really pretty bullish about the transports beginning to show some nice strength. And you can see it here with the truckers making this move above all of the congestion that we saw in the latter part of July and throughout August, trying to get through that 820 level. We did that toward the end of last week, went back, tested the area of the breakout, and now really strengthening back to the upside. So the truckers looking pretty good here. All right, Erin, I tell you, the market, though, to me, looks almost like, feels a little bit like Groundhog Day to me today. Still a lot of bifurcation. Certain areas looking much better, like energy, financials, 10-year Treasury yield moving, which means obviously Treasury selling off. And then we've got other areas, aggressive areas that have been performing really well that have struggled quite a bit just these last couple of days.
Yeah, it's been really interesting to watch. I mean, software, which was just the darling, has really taken it on the chin lately. I know I got stopped out of my AYX.
Well, I've got mine at the I don't have a stop because I've got it in a portfolio that I'm holding for now, but I'm really watching closely the gap support from earnings, which was right around 117.
Yep.
AYX last time I looked was trading at 116. It's kind of been fluctuating there. But yeah, I mean, a number of the software stocks, ones that have really been leading. I don't know if the market's sending us a message or maybe if this is just a little bit of a shakeout before another leg higher, but starting to get a little nervous on some of these stocks, some of these industry groups.
Yeah, it is interesting to watch that rotation, like you were saying. It's really fascinating to see energy starting to push its way up. But here's our upcoming schedule. David Keller will be with us tomorrow. John Murphy will be with us on Thursday. You don't want to miss that one. Tom will have a workshop next week on Tuesday, and Julius de Kempener will be with us on Thursday of next week. Today's agenda, I'm going to be doing speaking of stop losses, I'm going to be doing my workshop on how I set my stops. It's definitely a personal thing, so I'll just show you what I do. Talking technically, we have today with the Arthur Hills, talking technically 10 and 10. First symbol will be Digital Turbine, APPS. So stay tuned for all of that. Let's go ahead into the technical news and headlines.
All right, there really weren't any economic reports out today, so I'll just jump in to the 10-year Treasury yield and take a look at that. But we have been seeing a nice move to the upside. You can see, talked about the positive divergence yesterday. I don't have it all annotated today, but you can see the lower yields and the higher PPO. A lot of times that will lead to a 50-period test and a potential centerline test on the PPO. We saw that back in June as we moved lower in the yield, and the PPO turned higher, got through the 20, didn't quite get to the 50, didn't quite get to the center line, but certainly we saw at least a reprieve in that move to the downside. And I think that's what we're seeing here. Although at this point, I would say that the move back to the upside looks stronger than anything we've seen for quite some time, but it also follows a very steep drop. So I'm not shocked by that. I think, again, I would continue to watch this 180 area up to the breakdown at around 195. I think that's going to be critical short-term resistance zone on the yield. And if we were to break above that, I think that's would be a great signal in terms of money rotating away from the defensive treasuries. And as I've mentioned before, normally when you get a big move up in treasury yields, it tends to coincide with also a good move up in equities as money rotates from defense to offense. But we'll see whether or not that continues. But at least for now, we did get that break above the 20-day, and I think that is a good sign. All right, earnings news. Not too much in the way of earnings at this point, but we did have C-Trip come out yesterday along with Casey's General Stores and also HDS. So go ahead and take a look here at the C-Trip chart. And you can see C-Trip came up and did test earlier today an overhead resistance area right at about 35.5. You can see the high today, 35.47. That's just about where we were in mid-August. Didn't get through the 50-day moving average, and we have turned back down. I'd watch that 20-day moving average pretty closely. I think that's an area that needs to hold. C-Trip did beat on its bottom line, 33 cents versus 30, but it missed on its top line. I don't know if this one continues to drift a little bit to the downside. When you look at the relative strength, not really one of the better performers. So I'm not sure I'd be holding out too much hope there for a breakout. We'll see. Casey's General Stores. This one did beat bottom line as well, 231 versus 205. Stock had a lot of good stuff already built into it. I mean, this was a big move from about 132 up to about 173 in the course of 2 months, a little over 2 months. So I think that a lot of the good news was already built in. The stock gap down has come back up. I would be watching today's low because it does coincide with the mid-August low at about that 163 level. To the upside, we've got maybe 173 and change as resistance. I expect that we'll probably consolidate in that area for a period of time. HDS, they matched their estimates on the bottom line, $1.08 versus $1.08 expected. But again, this is another one that was not performing very well relative to its peers or relative to the S&P 500. And we found out why. The fundamentals really weren't that strong. Stock gap down. Did get close to the August low, not quite, and then started, we saw some buyers coming in. It would seem to me like 35.5 is probably going to be visited based on what I'm seeing here. Huge volume, move back down below the moving averages, unable to break above the prior resistance up there around that 41.5 area. Now we're back down challenging the lows. I suspect we'll probably go back down and challenge that December low. All right, some of the areas I wanted to talk about. I mentioned at the top of the show some of the areas that were doing pretty well today, but there are a number of areas that are not doing well. And I think what I'll do first is just show you, and this was the same thing yesterday. I mentioned Groundhog Day. You look at the overall market, Dow down 42, S&P down 13, Russell 2000 down 1 and change, NASDAQ a little bit more, down 45. But overall, that doesn't seem too bad. But I'll tell you, there are some areas of the market right now that are really being hit hard. And if we look at consumer discretionary, I mentioned restaurants and bars. This is a group down more than 3% today. This is another big hit today in addition to what we saw yesterday. Non-durable household products right here. This has been one of the strongest areas of consumer staples. Personal products, same thing. Food products even, which had been pretty strong, getting hit. And soft drinks. So a lot of the areas where we had been seeing strength, not so much. Yesterday and today especially. Renewable energy, Look at that move to the upside on that mini chart. That one's struggling down today, in addition to being down yesterday. Insurance brokers, specialty finance, consumer finance, financial administration. These are all areas that have been leading financial stocks, and they're all getting hit pretty hard to the downside. Medical equipment, best area in healthcare, getting hit hard to the downside. Industrials, you look at what's not performing today, same thing as yesterday. Business support services, waste and disposal services, defense. All of these groups have been among the leaders. And all of a sudden, the last couple of days, a lot of money rotating out of these groups. Again, is it a short-term pullback rotation? Folks trying to get back in maybe a little cheaper? We're going to probably know here over the next couple of days to a couple of weeks, but things have not been very good in these areas the last couple of days. Software, there's another one in that technology space. It's Erin mentioned that one's been one of the darlings in the market really for the last few years. But software is really struggling, especially some of those smaller companies that had been on a roll to the upside, getting hit pretty hard this week and the end of last week. All right, so let's take a look at some of these on charts and see what's going on. So financial administration stocks, we got back up, essentially put in a double top, didn't quite get there. You can see, though, the last 2 or 3 days, we haven't seen this kind of I'm going to pull up the S&P 500 so that you can get a sense of what the S&P 500 is doing. We've had a little bit of pullback, but really not much. So what's going on is there's a lot of movement underneath the surface, a lot of rotation, but the overall movement in the S&P 500 has not been that great. So let's go back, take a look at the financial administration stocks again. Here you go. I would really be watching this breakout level right here at about 560. We went back down in early August, and that's where we held. I think as long as financial administration can hold that prior low, I think we're okay. In fact, I would just say that is your trading range. But if we start to break down, I think that's where things start to look a little bit more problematic. Maybe another one to take a look at. I talked about software. Let's pull up software. So software did break out of that August range barely, middle of last week, but it's gone back down. Hasn't broken down yet, so I'm still looking at it as holding up, pretty well. But some of that too is Microsoft. Microsoft hasn't been selling off the way some of the other smaller names have. So Microsoft's holding up the group, but if the group breaks down below 2640 or so, I think that could be a little bit problematic, something to keep an eye on. One last one, then we'll take a look at that scooter mover. First, let's take a look at the medical equipment group, because this is another group that's been really strong. You can see it's off of its earlier lows. It's been bouncing off this 1850 area. Maybe we go down to 18.25, which was the August low, but we had just broken out on Friday to a new high, and now 2 days later, we're almost all the way back down at the bottom of that range, down 110 points in this group, which is about 6 or 7% in just the last 2 days. So that's what I've been talking about. A lot of rotation taking place here. We'll have to see whether or not that continues. All right, we'll go back to the dashboard here. And, of course, with the movers to the upside, one I wanted to point out was Noble Energy right here. It's up 19 points today on its scooter. And if we pull the chart up, you will see that making a nice breakout here. So not only is it moving in terms of scooter, giving you an idea of some relative strength, but when I look at this, I see volume picking up. I see a breakout above an area that has really struggled. I mean, we've struggled on Noble to get through that $23 level. Did it yesterday, and we're continuing that move today. Looks like it could be poised, perhaps, to challenge that April high all the way up in 27.5, 28 level. So for that reason, it is your scooter mover of the day. When we get back, Erin will discuss setting stop losses, so stick around. We'll be right back.
All right, we are back. Sorry about that. Wake myself up here. So I'm going to talk to you today about how I set stops, and I'm not going to just call it how to set a stop, because setting stops, I think, is a personal thing. It depends on a lot of different methodologies, your risk tolerance, the volatility of the stock, etc. But let's go ahead and go through. I'm going to first do kind of my we'll look, first we'll just look at what is a stop loss. We'll talk about the advantages and disadvantages of having a stop loss. And I'll go through how I set my stops. I'm going to look at the percentage loss, how you can do that. You can just set a price point. We'll talk a little bit about trailing stops, and then this one is a little dangerous, but I admit to setting mental stop losses and not actually putting the order in. So just going to be honest with everybody in how I do it, because this is how I set my stop losses. So let's first look at what is a stop loss. It's basically an order that you can place with your broker to sell a stock when it reaches a certain price. And you can set it. Do you want it to sell all of your position, or do you want it to sell half of your position, or however your broker allows you to set it up? It's basically an order. It's really designed to limit your losses. And that's a good thing. A lot of times, you get into a stock, and if you don't set that stop loss, sometimes you can get really hung out to dry. But of course, there are disadvantages as well, but we'll talk about that in a moment. So they're designed to help you limit your losses. And then there are the percentage loss orders, which you can set up, well, I only want to lose 5%, or I only can tolerate a 10% loss on my intermediate term investment. There's also what they call trailing stops, and they follow the rally with you. So basically, you set your stop loss, it's say 5% loss you're going to tolerate. Well, if you've got a stock that starts to make a run, that stop loss of 5% follows you up the ladder. So every time you look back, your trailing stop is just as far away from you as it was when you went when you were lower on that ladder. And then there are, of course, the stop orders that you can place. Just say, hey, if it gets below this price, I don't want it anymore. And that's another type of loss that you can set. Well, there are a few advantages, obviously. My favorite is that I don't have to keep my hands on the wheel. I don't have to look at my account and my charts every single day, every hour of the day, that sort of thing. I like to swing trade. So most of my trades usually are in that intermediate term time frame. So I don't really want to look at it every day and have to go through those emotions every day. And a stop loss really helps you prevent that. And of course, it's really handy before going on vacation or time away. I got really hit hard. In 2010, before the big price collapse, I got all into metals. I was in gold and silver, and it was, of course, the place to be during that decline, and I was doing great. And then I had to go and move my daughter into college for 3 days. I was gone for 3 days. And on the final day of that vacation was when the market started to rise, and gold and silver just got hammered. And I had not put that stop loss in. So I could have really, preserved so much of those gains before I left by just simply setting a stop loss before I left. Because I knew I wasn't going to be able to pay that close of attention to my investment account. And so I didn't prevent a serious loss. And that's one of the big advantages of a stop loss, is that you can prevent, serious losses. I think for a lot of beginning traders, stop losses are a really good idea. I think it's like a safety net that maybe when you're first starting to foray into trading stocks, it gives you that sense of security, and that I just set a 4% stop loss. I'm not going to lose much more than 4% on this trade. Disadvantages, well, obviously the biggest one that we all complain about is getting stopped out too early. You have to, here's some of the ways you can prevent that. And number one is to understand your stock's volatility, because there are some stocks, biotechs. I know for a while the solar power, renewable energy space, you get a lot of fluctuation. And if you're looking at buying a stock that maybe is a lower price point, just understand and look in the past on this chart and get a feel for the volatility. Because if you can have days where it'll go down 8%, but the next day it goes up 10%, you need to set that loss accordingly. Otherwise, you're going to always be stopped out too early because of those swings that you will get a lot of times. So pay attention to that. And of course, I think a big one is to understand your risk tolerance. You need to know that if I put money in a stock and it loses 15%, even on an intermediate term trade or a longer term trade, if that's going to just give you heartburn, knowing that you could end up taking a 15% loss on something, well, then maybe you should be in a different time frame. Maybe you should be thinking of a different position size based on what the price of the stock is. I think people really kind of forget that with the lower price stocks, that number one, they can be very volatile and you can, of course, make a lot of money on them. But I think people forget that you really need to position size properly with those lower price points. Just something to think about. Another disadvantage is stop losses are considered market orders. So you may set your stop loss at, say, $21, but all of a sudden the stock starts to go lower and it's gone below your $21. So now that market order goes in. And that market order doesn't mean that you're going to get that exact, 5% loss or or exactly at $20 if that was what you set your stop loss. You could end up with it lower than what your stop loss is, simply because it's a market order and it will go into effect right away. But if, for example, you're in a price shock, which is my next point, you're going to definitely see your price close out lower than what your stop loss was. Price shocks are those days where it's just a waterfall decline. There's really nothing that maybe you knew was going to happen that was going to cause that. Tom talks about being not holding through earnings. And that's a good idea because price shocks happen on earnings. Now, of course, they happen to the upside, and that's awesome, right? But they do also happen to the downside. And if you get a stock and it opens, 6-7% lower than it was the day before, you're going to get stuck even if your stop loss is at 5%. So it's just something to think about. So it does protect you somewhat from price shocks, but just realize that when you set that stop order, it's not necessarily going to execute at that price that you set. And then also there is it's not really available for some securities. Now, of course, this is really related more to, say, penny stocks, those types of stocks and securities. There are some based on your broker and various rules and regulations that you can't set stops for. So that's something that maybe you want to go in knowing as well. But I've never run into that, and I always stay away from penny stocks. I don't have any risk tolerance for that. Okay, so let's go ahead and look at a few examples. I thought what I would do is take you to a scan, and we'll do this real time. So I will run the scan, and this is what I did yesterday. I've got a new newsletter that is out called the Decision Point Daily Diamonds. I present to you 5 stocks that have come from one of my many scans, and basically I get all those results, and then I will do exactly what I'm going to do for you right now. I sift through all of those stocks, determine the ones that have the best, probability for success based on my analysis process. And then I present those 5 to you. So I don't present it with stop losses. I was going to do that, and I realized, as I was writing, everybody's risk tolerance is different. Some people may prefer a trailing stop loss. many people prefer a mental stop loss because they do like to look at their account every day. So just keep all of that in mind. But like I said, I don't present those stocks with a stop loss listed just because it's somewhat of a personal thing. And I know everybody out there is watching this with bated breath to get the golden key answer to how to set a stop loss. And I just can't tell you that because it is kind of a personal thing to some degree. But I'll give you my guidelines for how I do it. And then, you can take it or leave it. Like everybody does with all of our commentary, you can take it or leave it. So here's Carl's scan. I sat down with him actually yesterday before I wrote my article to get his thoughts on what he looks for when he does a scan. And this is very similar to some of the scans that I have. This pulls, I think, a lot from my general PMO scan. But basically what he looks for is he wants a US stock that has a decent amount of volume, not too liquid. And then he wants the PMO actually below the zero line. So he's really looking for a stock that's kind of beat down as far as price. But he wants that PMO to finally be bottoming and showing some life. So it needs to be rising for 3 days. And then he wants to set it up that it's in a bull market configuration. So that means that you have your 200-day EMA below your 50-day EMA. So that's a bullish configuration for your stock. However, in that beat down way that I was talking about, he wants the 20-day EMA to be less than the 50-day EMA. So he's really hoping when he looks at this that he'll catch stocks that are nearing, that are showing price support along with a nice move in momentum. So this is what he would use. I'm going to be perfectly honest. He's not a trader. That's just not his thing. He loves to study the market and where it goes. So when I say that this is his scan, he doesn't run scans and then run into a brokerage account. That's just not how he works. He's in retirement. He's just not interested in doing that anymore. But if he were, this is what he would look for. So with all of that, I'm going to go ahead and I'm going to run this scan. And I think I had 35. Yep, 35 came up. So I'm going to replace a chart list that I use for scans. I call it my scan dump. I put everything in there knowing that anything that's in there will be written over at one point or another. So let's go ahead and look, just get a peek at kind of what came up here. And I find it very interesting. There was only one technology stock. Typically when I run my scans, I end up with a lot of technology, but I think this is telling you something. But on the other hand, look at these two defensive sectors, and we only got one for each one of those. So kind of an interesting setup there. So now that I have them all, I'm going to put them in my candle glance because this is the easiest way for me to separate out the chaff from the wheat, as they say. So I can look at all 35 stocks on 2 different pages, and it gives me a really good feel for what things are looking like and what I like and what I do not like. So, and again, that can be sort of, something that you think about, if you have a different process, maybe you look for different things, but here's what I look for. All right, so first ones that catch my eye. Interestingly, Brinks was one that I did put in my diamonds yesterday, and certainly having a nice day. So let's go ahead and annotate it and see where we could put a stop on this if we had picked this up yesterday. So first of all, with all of your analysis, I recommend setting up your support and resistance tools. This is really a great area of support. You can see we got some touches back here, a touch back here for support, and then both of those bottoms, double bottom. That's one of the reasons it caught my eye. And I think this, when I ran it yesterday with my dad, it was the same deal. He saw this one. I was like, oh, I like that setup. So it did end up in the diamonds. I don't run them by him. It just happens, so happened because we were doing his scan and trying to figure out the best way to do it. So it is a double top or double bottom. So your expectation after it breaks through the confirmation line, which is set up in the middle of your W. You're supposed to expect to move at least the length of the pattern. So let's just put in a support resistance line that is just about the same height from there. All right, so that tells us our target should be right in this area around $81, $82. And notice that does line up pretty well with that area, that top that we had back here in February. So that's great. Now I kind of have a target. Well, now I have to think about what my risk tolerance is. If I'm looking at a daily chart, my risk tolerance is going to be a little different than what it is when I look at a weekly chart, just because the price, you'll see. I'll show you the weekly chart for this one. We'll look at that too. So anyway, we have this PMO buy signal that's set up. I know that my target is about to the top right around 82, and I've got my support level. Now, one of the things you could certainly do is set your stop just below the support level, and I'm going to use just a horizontal line here. We'll make it purple, I guess. Oh, pink. I like my pink. Okay, so you know, we could set it down here just below, right, the support level that we have going on here. That might prevent us from being stopped out, right, because a lot of people are going to look at this level here as support. I mean, you've got a double bottom sitting right on it. That's going to be sort of the obvious level that might be set for a stop. And so what can happen is people will set these stops right here, and then it's going to fall even further as the sell orders start coming in. So to avoid being stopped out, a lot of times you can set your stop just below that area of support. And that, I would say, is a pretty good way to do it. But again, it has to be all about your risk tolerance, doesn't it? So if you really want to get a little tighter on your stop here, we could move it back up. We got the breakout, so you could move it up to that area right here where you have the confirmation line. Because it looks like today it's going to hold up as support, and we got that break through the 20-day EMA. So if you wanted to have a tight stop, you could put it in there. Like I said, I wish I could just tell you this is how you do it. I'm just showing you sort of the creative ways that I do it, and whether you consider that right or wrong, I do not know. So for me, if I'm going off this daily chart, I've seen this nice move up above the 20-day EMA. I'm not expecting it to fall below the support level, but honestly, I can tolerate it if it does on this short-term one. So sometimes what I'll do is I'll just take it down a little bit lower than that support level, in this case, halfway through that pattern. And that would be my tight stop in this case. And notice it also does line up back here with that March low. It kind of coincides back here with these tops. So I feel like that would be a pretty solid level to set your stop. Now, let's go ahead, and there is a wonderful tool. I don't know if everybody is knows about it, but percent change tool. And this can be very helpful. Let's make this black, and I'm going to make it, yeah, that thick line should be good. So what you can do is set it at your buy level. So say we had bought this yesterday, I guess it would have been, well, just above that confirmation line. And I can take it and I can say, all right, I can tolerate 10% loss. All right, well, that's right about here. So you could just look through here. And a lot of the brokerage firms, if you say a 10%, they'll give you what the price actually is. But this is a really great way to sort of see what it would mean. So on my tightest stop up here, which obviously it's right at the buy point. So that's let's put where it is now. So if I had set it at that confirmation line, that means I'm only going to tolerate about a 3 3/4% loss. Now, let's get it down here, if I had bought it on the breakout from this confirmation line, notice that I'm lined up with the middle of that particular pattern. And again, that's a tight stop. We're looking at 3 3/4%. So if you wanted to take it out further, so say, oh, you know what, honestly, I can tolerate a 5% loss. Well, I'll just drag that down. And that tells you that about 72.50, that's your tolerance for your stop. But I think this is very handy. So, like I said, your brokerage, if you put 5% in, it'll just automatically tell you the shares that are involved there, the price that is involved at that level. So that can be very helpful, but being able to see it on the chart, I think is more important. So here's one. So I would have probably, had I gotten in yesterday when I had talked about it at the close, that would have been right here at about, let's see, $77. So if I had gotten in at that $77 level, obviously I'm not going to set my stop that tight. Looking at this visually, I would say, you know, I could probably tolerate it down to the level of that major support. But if I'm going to do that, like I said, I don't want to get stopped out by everybody who starts selling at that level. So I can either set it just a little bit higher at 5.8%, or if I really want to hold this, I think it's going to make a big move. You know, my target's way up here. If I think the upside potential is a bit more than the downside, maybe I'll stretch it out here to just below. So again, it's kind of an art. But the main thing is knowing what you tolerate, what's okay for you. Okay, so I'll go ahead and just save these for now. All right, so let's go back to our results. Let's see here, view all. And I'll do my candle glance. Let's go see something else that looks interesting. It looks like we have time for maybe one or two more. Alrighty, so discovery, let's see, that's kind of interesting. What I like to look for right off the bat is a breakout above declining tops. I like, especially, as you know, chart patterns. I think those are great. So I wouldn't be looking at this maybe unless I wanted to bottom feed. You know, American Express is in that financial sector, I know, so it could end up being not too bad. I see what could have been a double top. It's not technically a solid one because it's coming into it from a decline, but in any case, it doesn't look really healthy. It dropped below that support, so I would have to pass that up myself. Let's see, Delta Airlines, we're kind of getting an ascending triangle. There's got to be something in here I like much better, though, that hasn't had a huge percent rise. Let's look at maybe Integer Holdings. We've got that breakout from that declining tops trend line, and it's just popped up above that 20-day EMA. And because of the scan, I already know that the PMO is going to look good. But I don't know what the OBV is going to look like, and this looks really great. You can see a lot of accumulation here on this move to the upside. So this could be a pretty good setup. Let's go and annotate possible stops and support and resistance. So obviously overhead resistance, you know, if you really wanted to shoot for the stars, you could be going for these tops as your target. As far as a stop, well, I can see some pretty serious support here that we're sitting on, and that's pretty far below the recent bottom that we just saw. Here's the breakout right there. And so now it made it above that 20-day EMA. I think this one looks like a pretty good entry, right? So now I've got to decide, well, what am I going to tolerate for my loss? Well, honestly, when I look at this, I would be looking all the way down here to that major support level. You've got this low, this short-term low, and it does match up over here as well. So I'm going to look at what the percentages are, just so I know. So if I was getting in right here, and I don't like to take more than a 5 or 8% loss. All right, so I could set it right in here at about, just about 8.25%, just below that short-term bottom. You know, if you don't want to get stopped out, I think you're good right back here. That's an 11% though. You need to be able to tolerate that kind of a low. So I would have just probably said, well, you know, I really don't want it to go below that support, that short-term support. So I might go ahead and keep that stop a little bit tighter. Get this line here so I can grab what I want. And again, if I were getting in here. So for me, if I wanted to have it very tight, I have a little bit more, I think that this one looks pretty good. So I'm not going to worry too much about it, honestly, getting even this low. To that 8.25%. I think this one looks pretty good. The hard part is going to be what happens at that 50 and 200-day EMA. At that point, I can then reevaluate, set an alert to tell me, hey, it hit $78. Is that good enough for you? Well, let's see, probably not. Well, 2.5%. Yeah, maybe I'd take that or sell part of my position. But if it had popped up to 78 above these EMAs, I would be looking for a bit more of a move, maybe to these lows. But ultimately, my hope, of course, is a target way up here. So my upside potential in my mind is up here, and my loss is down here. So it's, risk to reward, I think, looks pretty good when I do this. So. All right, so I do need to wrap this up. I'm going to go ahead and just look at one more quick chart here that I already had updated. Let's see, where did I put it? It was in Monday setups, I believe. And I had one that I looked at. I feel like I had it on a weekly chart for us. Let's see. If not, we'll just move along. There we go. So here's a weekly chart. In this case, I set my stop at 33.50. This is the area I would say of pretty, I would hope that it can hold that 34.50 level, but I'm going to tolerate it down here to these tops. I would look for that as my lows. So that's about 33.50. My target's way up here. So, at this point, this turned out to be a pretty good Monday setup, actually. I think I did pick this one. So far, so good on the week, but that would be how I would have set my stop here. So sorry that it's not super obvious, like there's a magic number that you can have, but that's kind of the way it works out. So here are the takeaways. Stop losses are really there to help you, limit your losses. It can give you peace of mind because you don't need to really monitor it continually. You know that you're not going to take more than, say, if you really don't want to lose more than 5%, you're not going to lose much more than 5% if you take that. You don't need to monitor it continually. Your short-term price fluctuations can stop you out too soon. So again, kind of look at the stock's volatility, understand the type of big moves that it makes so that that maybe you need to be able to tolerate more risk. So again, know your risk tolerance. And as I said, know your stock's volatility. I didn't get much into trailing stops. I don't typically use them except on my runners, as I call them, the ones that just make that big move. That's what I did with AIX. If you see something going parabolic, excellent time to use a trailing stop because you're already to that point. If I'm already to the point where I'm like, yes, I could just sell it today and be all right, but I think it could go higher, so I don't really want to sell it right now. The trailing stop loss, I think, is a great way to do it because it brings it up. You still get to lock in those gains that you were pretty much, when you hit the target, you were ready to, hey, take it through. So that's all I have. Let's go ahead and Tom, come join in and we can look at that poll and see what people do. So kind of surprised at the nevers, but I don't know. Do you set actual stop loss orders, Tom, or are you pretty much a mental stop kind of guy?
I've been told I'm very mental. Yeah, I set stops occasionally, usually if I'm not going to be around and I know that I've got some stocks that are very close to key support levels, then I normally will set it. And it also depends a little bit on how much I have at risk. So if it's a big position or a bigger than normal position, then I definitely would make sure I have my stop in play. If it's a smaller position, and it depends a little bit on the type of stock it is. If I like Coca-Cola and I'm trading Coca-Cola on a pullback, it's a little different than if I'm trading Roku or one of these stocks that literally could be up or down $20 in an afternoon.
Exactly, that volatility.
Yeah, so I think it depends. I would say, if I was answering that, how often do I actually place? I would say rarely. Just on a percentage basis of the number of positions I have out there. But I also have the luxury of watching the market throughout the day, most days.
Exactly.
So, and I don't have 100 positions. So, so that would get out of control. So I usually have a manageable list in my trading account.
Yep. And I said sometimes to most of the time, I use the mental stop losses a lot of times on that really short positions, that I'm going to pay attention to because it's a short-term trade. I pay attention to it, but with the longer terms, and again, I will always set a stop on a runner, as I call them. It's just the trailing stop loss. Once I hit that target, now it's gravy from then on up, and so setting that trailing stop loss, I know I'm guaranteed at least that target percentage I went for. And so I'm not going to feel bad if I had to take, a 10, 15% loss, but I avoided a, 30% loss overall because I got out at the right time.
Yeah, I'm a fan of gravy, by the way.
Yes, isn't that the best? I love runners. You go through what I just did and pick those, ones that you like. And, you're looking for maybe, that 5 to 10% gain on a short-term trade. And then you end up with this runner. It just goes like for me, AYX, I was like, bam, baby. And then I got in this other one, Mod, and one of our Monday setups, and it was a runner. So sometimes you get them, enjoy them.
Yeah, absolutely. All right. Well, I do know we're going to have the 10 and 10 coming up here in just a moment or so. But first, we've got Talking Technically. So let's listen in to Arthur Hill's discussion of the RSI.
Indicator settings. What is the perfect setting? Well, actually, there's no such thing as the perfect indicator or the perfect settings. You have to really adjust the indicators for what you're trying to look for. Take RSI, for example. I use RSI to find short-term oversold situations when the bigger trend is up. And to do that, you kind of have to tailor your RSI. So if you look at this example, we've got IJR with 14-period RSI. That's the default setting. And if you look here, well, from February on, it didn't become oversold once. So if you're looking for an oversold opportunity to partake in the bigger uptrend, you have to adjust your settings. And I prefer to use 5-period RSI. And if you look at this chart, you can see a number of oversold readings, and that gives you a mean reversion setup. In other words, you have this trend, and you're looking for a pullback and a bounce that mean reverts. Now, that's for major index ETFs like SPY, QQQ, IJR. When it comes to individual stocks, I typically use 10-day RSI because individual stocks are a little bit more volatile. And so on this example, you can see I've got ICE becoming oversold there in early August and bouncing, and you got a little breakout and a move to new highs. So the bottom line is, there's no perfect setting, but you got to think, what am I trying to capture, and use RSI to capture that.
All right, welcome back, everybody. We're going to jump into the 10 in 10. First symbol today is Digital Turbine, APPS. I've gone through and annotated this one. I think this one looks really nice in the software space. It's had a rough week. Of course, all the software stocks really have been struggling so far this week. But this is one that outperformed significantly on very heavy volume throughout August, even when the market was struggling and even when software was struggling. So you do have one of the leaders here, but it's volatile. So you have to keep that in mind. When you get into these smaller stocks that really can move, a lot of times you don't have as many market makers on these particular issues. And as a result, you can get some exaggerated moves in both directions. So here, I think yesterday, the stock had pulled back, come down to almost $6. And if you connect all these, what I think are pretty important lows, you can see that yesterday's low just about touched that trend line that the stock has enjoyed bouncing off of for most of the last year or so. Today, it's down 4%. Recent highs up closer to $8. Now it's sitting at closer to $6.50. I think the reward to risk is much better now, but you still have a very volatile stock, no guarantees it holds. I would be looking at this trend line. And then also, I think there are two key support levels. One, after the breakout on very heavy volume in the second week of August, you can see this pullback went back and held that $6 level. We almost tested that yesterday. And then even before that, if you look back to early August, there was a huge move down intraday and we came back up and held about the 550 level. So I'm going to say that there should be a number of buyers, I would suspect, if this stock gets down into the $556 range. Now, sitting at 650, you might think, well, I don't want to take that chance. But at the same time, there's no guarantee we're going to get down that low. This is a stock that's gotten beaten up pretty well here over the past few days. I suspect we're going to go back up and challenge that recent high. But whether or not in the short term we move a little bit lower first, very hard to say. I do like the stock, though. If you look at the relative strength, it has been one of the strongest stocks in software. You can see that relative strength really showing up in the month of August. I mean, it was already on the rise, but it really took off in August. So I think we're getting a little bit of profit taking. The thing that I'm most concerned about with software, and that I'm going to be watching very closely, is when software got hit a little bit on a relative basis back at the end of May, early June. We set what I think is a really important relative support level just below 0.90. And we have been under a lot of pressure in software for the past couple of weeks, but we still are holding above that level. If we lose that level, to me, it begins to show a little bit different picture for software, in that you would be at that point at about a 5 or 6 month relative low. And then I would certainly have my stops much tighter on these software stocks.
All right, let's see here. The most popular in the chat room, actually, we had two. First one is MDB, Mongo.
Yeah, this is one. I think this was a scooter mover yesterday that I watched, and I'm just going to put one level up here since I talked about it yesterday. But right here is your key area of support. You can see we bounced right off of that yesterday around 125. I mean, you could go down to that intraday low with earnings maybe around 120. But for a stock that's been in this range, a very, very wide range, this is another one that if software does start to pick back up again, MDB sitting in a nice reward to risk area for entry. But I would keep tight stop, especially if software continues to break down.
All right. The other popular would be Tandem, TNDM.
Yeah, a lot of the leading stocks, and I still call Tandem one of the leading stocks, even though it's been relatively flat for the past 5 or 6 months. It made a huge run, 25 or so up to 75. I mean, when you get a triple on a stock in about 3 or 4 months, it's not unusual to see consolidation. It is reversing nicely. You can see again how quickly this stock moves back and forth. So you have to understand the volatility. But I do like the stock. I think what we're seeing is a stock that's in a fairly wide range, 75 to the upside, and I'm going to say right down here at about 52 to the downside. Today's earlier low, 58.5, getting close to recent lows, but I would say the big trading range on this is still from about 52 to 75.
All right, let's see. Next one up is Kirkland Lake Gold, KL, our only materials request.
Yeah, the gold area of the market struggling a little bit, just like I was saying earlier. A lot of the areas that have been leading the market really are struggling this week, and you can see that weakness started at the end of last week on KL. I'm going to say there's still a nice uptrend in play here. Short term's got some issues, but I still think it's one of the best stocks within the space. So I would probably just maybe look at this as a trend line to kind of keep an eye on. And then probably the recent low. As long as it keeps putting in higher lows, I'm okay. So this low in mid-August, I'd watch maybe around 42.5. If you lose that level, you will have lost that trend line plus price support. And you can see the volume has been picking up a little bit too. So I would maybe just keep my stop in play. But I think KL remains one of the better stocks in this space.
All right. How about Meritor, MTOR?
Right. MTOR. Well, it's bouncing off of oversold. We did get close to a key area of support. I don't know that I trust this stock because it hasn't been one of the best performers, but I think that piercing candle right here that printed at the bottom did mark a short-term bottom. You know, looking back to the upside, I think we had multiple support. I think it's pretty obvious to see every time we got down to around 20, we kept holding that level. But then once we broke down, that now becomes resistance. And then you've also got that declining 50-day moving average. So I think those are the two levels to watch to the upside. If I was in it, I think I'd probably be a seller as I got up into this 20, 20 and a quarter area.
All right, this one looks pretty good on the RRG. Teva Pharmaceuticals, TEVA.
Great. Yeah, farmers haven't been very good. I do like this breakout above the 50-day. It's been it's first time since February. I like the volume coming in. It's been in a huge downtrend. I would say up until recently, this was more of a value play if you were getting in. Now it's starting to turn a little bit technically. I mean, we do have the stock versus pharmas at about a 6-7 week relative high. Not exactly a great performer. So what that tells me is make sure I keep my stop in play. So I'm just based on this right here, the fact that this has been such a weak performer in the pharma space, I would be careful if it fails. And there are two levels really to watch. We had $8. We broke below it on heavy volume in July, failed, broke down again. Now we're coming up to test that and the 50-day. If we were to close below both those levels, I would be a little skeptical just simply because this has been in a downtrend for a long time and it's been a weak performer.
All right, let's see. The next one would be Edwards Life Sciences, EW.
Yeah, I was looking at this one earlier, and I'm going to have to really pick it up here. Big reversal today off of the 50-day moving average and also off of recent lows. I think this is a really nice looking chart. There was the prior low. Here was that prior closing low. There's the 50-day test. I think it's just been in an uptrend, probably got a little ahead of itself to the upside, pulled back, but I still like the stock.
All right, next one up is UNH, United Health Group.
Yeah, another one in the healthcare provider group. Yeah, I'm not liking this 20-day test here. I'd like to at least see it get through. So for now, it's probably a little early for me. You can see a big reversing candle there. You see these failures at the 20-day. And now where are we? Right here. And also at a key resistance level where we just failed a little over a week ago. So let's get through 235 and then maybe reevaluate.
All right, Senior Housing Properties, SNH.
All right, SNH. I think it's pretty clear this one's been an underperformer for quite a while. So this is not my kind of, this isn't my cup of tea in terms of trading. I think you got two key areas trying to get through that August high. Really hasn't been much volume, though. I think the bigger level is going to be trying to get through about 975 if we get there. Again, not one of my stocks. I don't like these stocks down about 50% over the last year. I'd have to see more technical strength first.
Okay, and our final one, AutoNation, AN.
Yeah, AutoNation. Nice breakout. Really great relative strength, breaking out versus specialty retailers, breaking out versus the S&P. And this is when specialty retailers haven't even been strong. So imagine if the group starts to show some strength again. The only thing I would say is because you are in a weaker group, just make sure on any pullback that you hold that rising 20-day moving average. That's what I'd look for.
All right, that's it. 10 in 10, less than 10, I'm sure.
Yeah, about 10, but not bad, not bad.
Very good. And there's all of the symbols that Tom just went over.
Yeah, and I was just checking out a few minutes ago before 10 and 10 started, looking at the overall market, and the Dow's gone positive. NASDAQ now is only down 14. Russell 2000 still sitting down a little bit. S&P down 5. Not really any big shakes, but still there's pressure on some of those aggressive areas. We'll have to keep an eye on that.
Yep, holding our breath, I think, for the Fed announcement coming up.
Yes, I'm going to be a little nervous going into that one given the recent history, but we shall see. Anyhow, do want to thank everybody for being with us today. Please remember to complete the survey as you exit. It is located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We will be back here tomorrow. I would continue to watch that market this afternoon, see if some of those leaders rebound. In the meantime, you still got a little bit of a mixed signal. Take care, and we'll see you tomorrow. Happy trading.